Hi traders, welcome back to Pure Technicals. This is Sam Broy. Following on from the previous lesson on pin bars, we're now going to be looking into inside bars and engulfing bars. Now, as always, I have the most relevant levels of support and resistance already placed on my charts for when I open them. And we're going to be looking for a signal like this one here, which I previously mentioned on the pin bar lesson. We actually have a bar here that stays exactly in the trading range of the previous bar, and that is basically simple as what is known as an inside bar. This one isn't perfect because you can see it did actually travel slightly lower than the previous bar, but that's the rough idea of it. You can see you have another one here, and when you get these inside bars at support and resistance, they're a very good sign that things are going to change direction. And the reason for that is when you see a bar like this trading in the middle of the range of the previous bar, this is called the mother bar, this is called the inside bar. When you see the inside bar trading inside the range of the mother bar, you can see it's a level of consolidation. Consolidation is normally a thing that happens when a market is about to change direction. It's a day of indecision, or maybe a few hours of indecision before the market breaks out and changes direction. As you can see, it's exactly what happened here. You had the market come up, test resistance at 1.34. The next bar was the consolidation bar, the inside bar, and then you see the market start to fall away, start to sell off. Now, the way we trade these is we wait for the inside bar to form and close for a new bar to open, and then you mark the highs and the lows of this mother bar. For example, the high of this mother bar was here, the low was here. When you see an inside bar, the market could move either way, so the safest way to do this is to trade a break of highs or lows. So you could set a buy order above the high in case it breaks higher, or you could set a sell order above the low in case it breaks lower. Now, as I mentioned, you clearly don't know which way the market's going to go when you get a consolidation like this, but you have some sort of idea that when it hits a level of resistance, the market is probably going to move down off of a consolidation phase. So rather than setting a buy limit, you'd be more likely to look and do a sell limit. And if you put a sell limit on this and it broke down through, you would actually gain just over 100 points. It's quite a big move. If you traded on the break below, your stop loss would be above the high, so you'd be talking about just above here, above the very high of the mother candle, and then if things did actually happen to break up, you would be stopped out immediately. If you look just here, right next to this, on exactly the same level of resistance, you have a huge inside bar. The big green mother candle here, and the red inside bar of consolidation here. You can see the low here, the high here. The market didn't even try to break the highs. It actually hit this resistance and came straight back down. It didn't take it very long to break down through support, and when it did, you can see there was a massive sell-off. I'm actually in this trade right now. The second thing we're going to look into is engulfing bars. Engulfing bars are exactly the opposite to an inside bar. I did mention previously about there not being a clear pin bar reversal sign here, and I did say that there was another signal. We'll talk about that another time. That time will be now. This green bar is clearly completely engulfing this previous bar. Engulfing basically meaning it broke lows and it broke highs. And when you get a bar like this and it closes, it's a pretty clear sign that the market is going to continue in the direction of that engulfing bar. So if you have a green or an up engulfing bar, the chances are it's going to keep moving up. And for the same, for a bearish move, if you had a red or down engulfing bar, you'd would be expecting the market to sell off a bit more. For example here, this is actually a wonderful thing for me to show you because it's a signal I like to trade, and I entered this trade a few days ago. There's an engulfing bar here. It's a bearish or a down, a sell engulfing bar. I ended up around here at the 133.2 level. Things got a bit concerning when we had this pin bar here off of support. Luckily managed to hold on for an extra day, and it did break down through. Market came back up, and then we had this huge bearish engulfing bar. A lot of this was actually because of news today. Some data came out that was bad for the euro, and that's what's caused such a huge move down. But it's actually made a nice price action engulfing bar. So now I know I can hold on to this position for slightly longer than I did plan to, possibly targeting 1.30, which will be a pretty huge profit. So just to clarify things once more, inside bar basically consists of a mother bar and 1, 2, maybe 3 even inside bars that trade within the range of that mother bar. You normally find them at support and resistance. If you find them at resistance, you're normally going to be looking to sell, and the profit targets will be next support. For example, this one you would have been looking to profit target around here, where you had previous support. Your stop loss would have been placed on the highs for a sell, and obviously vice versa. If you find an inside bar at support, you're going to be looking to buy. You're going to be looking for next resistance. Your stop loss will be below the low of the buy inside bar, and your take profit would obviously be next resistance. As for engulfing bars, there's not really any way to determine an entry with an engulfing bar. They're rather a sign that the market is going to continue. So they're kind of a nice thing to find when you're already in a trade, rather than to use one to actually trade off, because they're very hard to get sort of a clear signal or an entry, because by the time you've noticed that it's going to close as an engulfing bar, there's already obviously been a huge move, because they're never particularly small, these engulfing bars. You never really want to trade after a market has moved a huge amount, because the most likely thing that's going to happen now is the market is going to move back up at least halfway. So the last thing you want to be doing is seeing this and entering straight into a sell trade, because it could come back so far against you that you get stopped out. Realistically, you want to be waiting for a move back 50%, at least 50% up this. It could end up being that it comes back up to highs, or it could mean it comes back up to resistance before it sells off. So you want to use this as a signal that the market is most likely to continue selling, but don't use it as a signal to enter a trade. Wait for a better signal, for example a pin bar, or maybe an inside bar up here at resistance. If you did manage to find later on that the market came down a tiny bit more, maybe came back up, hit resistance, and you had a pin bar, for example like this, like we stated in the previous lesson, you saw a signal like that after this huge bearish engulfing bar, that would be an extremely likely signal to be trading off, but you do not want to be trading off of this engulfing bar alone.